Can everyone see the screen? Should say the Employee Retention Credit Program.
Yep.
All right, perfect. Great, we're gonna go ahead and get started. I'm gonna try and keep this to about 35, max 40 minutes. There's a lot of information here, but I wanna leave plenty of time to ask either general or specific questions. And certainly anyone can reach out to us after the meeting to go over the program in more detail. Do want to thank the Chamber for hosting this event and really endorsing this program. We do have, as Sam had mentioned briefly, we do have a partnership with the Neighborhood Association where this is designed to actually not only put money back into businesses through this program, the Employee Retention Credit Program, but also money back into direct investment in the community through the neighborhood associations. So this is one of those partnerships that really comes full circle, where businesses are working together, leadership is working together, the city of Baltimore, all of the key players are working together to making a meaningful impact in our community. So I just really thank everyone for their leadership in this. Sam, is there anything to add or?
We're just again, if are there new people on? If you're on, make sure that you put your business name, your name, and an email address in the chat box so that we know who's on the call, and we can then reverse reach out to you with any information that we have or follow up, things like that, and also send you a copy of a link to this presentation. So some good stuff. So take some notes or we'll send you a copy of it.
And then the other thing, if you have questions as you're going along, put them in the chat. I'll keep track of it. And when we get to the question and answer period, we'll go through those first. And then that may answer your question also. And it'll help us move along quickly and smoothly. But other than that, we've got nothing else. And we're just going to completely turn it over to Jonathan.
Great. Thank you. So just briefly, the agenda, we're going to spend most of our time discussing the employee retention credit. I do want to touch on two key areas that are interwoven with this, and that's both the SBA disaster loan. Many of you probably already familiar with that. And of course, the PPP loan forgiveness process. PPP loan was a great program. There's some things about the forgiveness process, though, that are meaningful to know about when you go through it. That helps increase the amount of money back for your business. So just briefly who we are, we're licensed tax professionals. We're located in North Tampa. We've been here for a very, very long time. We've been specializing in tax credits and SBA programs long before the pandemic. I personally have handled tax credit programs for small and large organizations, both here locally, but also nationally. But we are primarily a small to medium-sized business focused entity. That's where we believe the sweet spot is. That's what makes this country great. I have a military background, and I get on my soapbox every now and then about how important entrepreneurship, how important small businesses are to our community, to our identity, to really our way of life as Americans. So just a brief overview of the employee retention credit. This was created as part of the first stimulus package a long time ago, back in March of 2020. At that time, it wasn't really known. It wasn't very as valuable as the PPP. And so what they did in subsequent bills is they enhanced that program. And that's really the foundation of what we're talking about today. If they had not made those changes in the subsequent bills, there really wouldn't be as much to talk about. Now, just to reiterate, it's called a credit, but it is tax-free cash back to the business. It's literally a check in the mail that you would get from the IRS. And what I tell people is think of it more like a refund, not so much a credit, okay? Because it looks like a refund from the business owner's perspective. So the time period of which you're eligible for this, not when you need to apply, but when you're eligible, it went retroactive back to March 12th of 2020, and it's valid through the end of the year, December 31st, 2021. That's the eligibility period, not the application period. So just because it comes up on December 31st does not mean you have to apply for this by December 31st. And while we're there, there was a question that was asked before recording it. It said, is there concern about it running out of money? And is there a deadline of when to apply for this? So to answer the first question, there is no concern. This is operated through the IRS. This is not a set aside that was like given to the SBA for the PPP program. So there's not an issue of it running out of money. The second thing about this is in one of the bills, they actually extended the time at which you can apply. Okay. And it's been extended out to 5 years from the deadline of what's called the payroll tax return. So I literally, we could be here in 2026 still helping businesses capture this credit from March of 2020 up till the end of 2021. So you do have plenty of time. You know, my thing is though, why wait to get this? It's time to move now. This is meaningful money. It's significant dollars. In the next slide, I'll go over some examples of live clients and what they've received. So the max credit that you can receive for 2020 is up to $5,000 per employee. And the max credit that you can receive in 2021 is up to $28,000 per employee. And that's broken down by $7,000 per quarter. And I'll go into more detail on how that's determined. Now, what is new, and for those of you that were on the presentation a couple of weeks ago, you did not get this information. There's a new category, and I think this is incredibly impactful for the chamber, for attracting new businesses, so on and so forth. So this is big. They have this category. It's called the recovery startup businesses, and basically, and I'll go in a little bit more detail. But basically, if you started a business after February 15th of 2020, you are eligible for this program that could be up to $50,000 per quarter for your business. So whether, so it's huge. I mean, literally, I saw a notice about a ribbon cutting for a business from the chamber earlier today. They could be very eligible up to $50,000 through this program, cash back to the business. It's very, very impactful. Another question that I get asked a lot is, well, I had a PPP loan, I can't do this. Well, when they passed the second stimulus package at the end of December last year, they changed that so now you can get both. So it doesn't matter if you got a PPP loan or whether you got two of them. Okay, you can still capture these dollars through the employee retention credit. That's huge. Okay, so these are examples of what we've been able to get for our clients. So you can see they're all varying sizes. So on the left, you've got a larger entity, 702 employees. Just in the first 2 quarters of 2021, they're looking at getting close to $5 million through this program. Now, this is a company that only got $3 million through the PPP, and they're able to get more money back through the employee retention credit than they were for the PPP. So they're not eligible. They weren't eligible for a second PPP loan because of their size, and they weren't eligible for the 2020 employee retention credit because of their size, but they were eligible for it this year. The middle example, a smaller entity, 63 employees, a restaurant. And what we've done between 2020 and 2021, even on top of them receiving 2 PPP loans, $635,000 back for the business through this program. It's huge. So, literally when I was talking to the owner, it was the difference between him being able to keep a location open and not keep a location or closing it. So this is money going back into the community by keeping employees active and supported through this. This is why I like it in terms of it putting money back into the business and having the business owner determine how they want to spend the money. The last example is a small private school with 8 employees. And even in addition to receiving 2 PPP loans, they're receiving $137,000 through this program. So you can see from these examples, and I could probably go on for the entire presentation, just giving you example after example of the businesses that we've helped through this and how meaningful it was. One other example is, I was talking with a business owner, and they're using the money to actually open up a new location. So think about this, right? This money's going back into the community, and as a result, be able to hire new employees, set up a new location, continue to generate value and revenue for the community. So I think that's just a great example of how these funds are being used locally. So I'm going to go over some of the eligibility requirements, because this is where it's important to partner with someone who knows the program. You know, I could go over the couple hundred pages of IRS notices that go in here and with detail, but there are nuances to the program. So you need to understand exactly how you qualify, when you qualify, you know, what the eligibility requirements are. And there, I just put some bullet points in the slides, and you know, we can certainly go over specifics as needed. But in 2020, in order to qualify, you need to have 100 or fewer full-time employees. You need to have paid qualified wages, and I'll explain what those are, between March 12th and December 31st of 2020. So that's in that entire period. You know, that's a long period. It's almost a full 10 months. And then in order to qualify, you need to be either partially or fully suspended, or a 50% decline in gross receipts. And that's compared to 2019. Now, we'll go over in more detail what it means to be partially or fully suspended, because that's where the majority of people qualify. And we'll go over that in more detail. Now, in 2021, you see these requirements are different. Now, they increased the employee count. They went from 100, now it's up to 500 or fewer. And now they look at qualified wages paid out during a calendar quarter, not over a longer period of time. Now, you still are eligible if you had partial or full suspension, but instead of needing a 50% decline in gross receipts, they reduced that to a 20% decline in gross receipts. Now, it's key to note, you're comparing 2021 to 2019. You're not comparing it to 2020. Now, you know, you'll see at the bottom of the slide is the definition of how the IRS definition of what a full-time employee is. And so this is why we're able to qualify someone with an entity with 700 employees, because you need to have full-time, and defined as full-time is 30 plus hours a week or 130 plus hours a month. So part-time, this is the benefit of the program. You get, you know, the wages you pay to part-time people, you go towards the amount of the credit that you receive back, but they do not count against the employee account. I have a company that had 160 employees, and were told that they weren't eligible because they had too many employees. Well, when we did their hourly review per IRS guidelines, only 80 of them were full-time and the other 80 were part-time. So that was the difference of them getting back zero, thinking that they weren't qualified, to getting nearly $600,000 just for last year. So it's important to know exactly how you qualify, all of the details that going into the determination of the program. Just a couple other details. As I mentioned previously, there's this new category called recovery startup business. And what's great about this is, if you opened after February 15th of 2020, and your average annual gross receipts is under $1 million, you will qualify for the Q3 and Q4 up to $50,000 per quarter. That's it. And so you don't have to be eligible under a suspension or declining gross receipts. Just by opening that business, you know, and paying wages, you're able to get that money towards your business. That's huge. Can you imagine a business that just started up, or a restaurant that just started up, and the ability to get that much money back in order to continue their operations? I think this opens up a whole new category of businesses that can be helped. Another thing is tax exempt organizations are eligible. Okay, so that's great news. Employers in U.S. territories are eligible, Puerto Rico, U.S. Virgin Islands. But this is based on wages that you paid, reported wages, W-2 wages, you know, that are reported to the IRS. So if you're self-employed or a 1099, you're not eligible for this program. Now, also, businesses open prior December 31st, 2020 are eligible for the 2021 credit. And I put an asterisk there because this also applies if you acquire a business after that. So we've had a couple of clients who said, hey, I acquired earlier this year, they acquired a business that for whatever reason. Well, they're able to capture the credit because the business that they purchased wasn't in existence during that time. So anyone who's acquired a business or looking to acquire a business, they could be eligible for the program based on the business that they are acquiring too. I know I'm throwing a lot of information out here. I'm probably speaking a little bit faster than normal because there's so much and I want to respect everyone's time. And I also want to leave plenty of time for questions. But please know this is being recorded. We can share the slides and we certainly can set up one-on-one discussions with you and your business to go over the program in more detail. So what do we mean by suspended operations? So suspended operations is basically a government order. It could be at the federal level, state level, could be local, either a municipality, county, that limits commerce, travel, or group meetings. And this could be a number of things, and I'll go over examples. So it really has nothing to do with whether you're essential or non-essential. We've qualified essential businesses, medical facilities, healthcare partners, even grocery stores that were deemed essential during this because their operations were still limited. And then if you were deemed non-essential, you're eligible with the government order being in place. Now, one of the questions we get asked a lot is, well, I've continued to limit my operations because maybe you're just comfortable with that, or maybe your customer base is comfortable with that. But if you voluntarily suspend operations, it does not mean that you continue to be eligible. Here in Florida, our governor basically said as of May 4th, the state order supersedes any local order. Right. So if you continued to limit, the capacity in your restaurant after that May 4th deadline, you're not eligible under a partial suspension. Now, you may be eligible under a different qualification, and that's what we help every business go through in making that determination. But it is a point that we get asked a lot, so I wanted to address it. So here are some examples of what we talk about in terms of partially suspended operation. And I'm going to hold on a second. Let me move over here. Okay. So we're talking about either reducing capacity or the hours of operation, right? So, retail, restaurants, when they had limited capacity in terms of seating, any place where there was spacing requirements that impacted how many people could be in the location, that's an example of being partially suspended. Also, any reduction in hours. We had several local, grocers that they were essential, but their hours of operation were limited. So they were eligible for this. Any entity not able to hold meetings or meetings are limited. Most people, it applies to religious organizations. In fact, in the IRS code, they specifically identify religious organizations in terms of their level of qualification. But it also expands to several other areas. One example is we have several clients that they're in insurance, but their primary customer base are school teachers. And they're primarily meet on the grounds at the school. Well, because they weren't able to hold meetings, their operations were suspended. So that's an example of that. Another example is businesses that rely on suppliers. And that could be either as a wholesaler, like you're not able to get things that you typically retail. It could be suppliers of parts. We all know what's going on with like the computer chips in the vehicles now. There's other materials that have been held up, and that impacts businesses downstream. Well, you're eligible for that if suppliers or other entities that help you conduct your business are affected by COVID or partially suspended. That goes downstream to you as well. Another example is a multi-purpose business. And I'll give, there's a couple examples, but think of a restaurant, right? Now, a restaurant could have their dining in, they could have their takeout, and they could have catering. And maybe during this time period, obviously they could not be at full capacity for dining in, but their takeout business exploded and their catering business did very well. Well, even with that happening, because one purpose of the business was impacted, it makes the entire entity eligible for this. Okay, another thing would be a medical practice that we've helped, where they've had, some of them were deemed essential and were open. Others were deemed, they had elective procedures that were shut down. Well, it applied to all of them because one purpose of that business was impacted from this. Another example is multiple location businesses. So if you have if you own a business and it has more than one location, and maybe, you know, you're under different local jurisdictions, and those local jurisdictions have different government orders, as long as one of your locations is considered partially suspended, the entire organization is considered partially expended. We have a religious organization that has multiple locations, some of which had different local orders, but they had one location that was under very strict orders. As a result, it applied to all of the locations. Okay, so that's very, very meaningful. Now, if you come down to this and it's kind of like, well, I still don't know if I fit into any of these things in terms of partial suspension, the IRS, they love to put out their tests. They've come up with this, what's called this comparable operations test. And we can go into that in more detail, but basically the gist of it is identifying how a business was able to transition from working in an office environment to an at-home environment. That's what that test is really designed for. Now, just to be clear, there's a lot of modifications that may have been required for your business, you know, plexiglass, stickers, all of those things. Required modifications do not create automatic eligibility. You know, we've helped a lot of restaurants in the Northeast in particular that are under much stricter guidelines than we have been here in Florida. Many of them had to build outside dining facilities. Well, they didn't get compensated for that, but they are still eligible for this program. So this is what we talk about when you go over like the suspended operations. So I know there may be a lot of questions about how you qualify, and you know what we do is it really is we look at each business individually to maximize their qualifications. So if you still have some question marks about how this impacts you specifically, don't worry. We address all of that. We walk you through the process. So what do we mean by qualified wages, right? So qualified wages is a combination of the gross wages paid to the employee plus the employer's portion of group health and retirement. It does not include the employer's portion of federal taxes, okay? So it doesn't include, you know, the Social Security or FICA contribution that the employer makes, but it does include the gross wages paid. Now, how they determine the credit is on a pro rata basis, right? So in 2020, in order to maximize the credit of $5,000, you need to have $10,000 in qualified wages for that individual. And then you get 50% of that. Now, if they only had 8,000, you still get 50% of the 8,000. Now in 2021, they look at the qualified wages still at $10,000, but they look at it over the calendar quarter. And then they give you 70% of that. So if someone made $10,000 in quarter one and you're eligible for it, you would get a $7,000 credit back for them. If they only were paid $8,000 in that quarter, you'd get 70% of that, or $5,600. So that's how it works. So that's where it's like, no matter how many wages that, you know, who they were paid to, it goes towards that qualification. And I do get asked this question a lot as well, like, well, what if what if they no longer work here? Or what if they weren't working with me at the start of the pandemic? None of that matters. It's based on the actual wages paid, regardless of whether you have the same number of employees, regardless of it's the same employees exactly. All of it is based on the wages that you've paid out during these time periods. Okay, so that's just good information to know. So while you're allowed to get a PPP loan and the employee retention credit, the IRS has basically said that you can't double dip. So you can't take $1 of wage paid and get $2 back. All right, so we need to carve out the PPP forgiveness wages from the employee retention credit. So we can't, and we go through that to make sure that there's no overlap. And qualified wages used for the ERC are excluded from other programs. And those are primarily like, if you're familiar with the Restaurant Revitalization Fund or the Shuttered Venue Operations grant that they have, those are typically the programs that this applies to. Now, of note, there was recent guidance that impacts qualified wages for if you're a business owner for your own wages, or your spouse, or if you have other family members employed with the organization. Qualified wages, by the definition that the IRS has for what's called an eligible employer, do not include owners' family members or extended family members. And what I mean by that, by family members, we're talking like children, grandparents, that type of thing. Extended family members go into aunts, uncles, cousins, grandkids, so on and so forth. So if you are a business, if you're an owner operating business, it's important that you know exactly which wages are eligible for the program and which are not. And I assume that's many of us on the call. All right, so how do you get this, right? Well, there's 4 ways that you can request the employee retention credit. And some are designed to be more immediate, some are designed to they're going to take longer. So the first way is you just claim it on the payroll tax return, a 941, a 944, 943, whatever it may be for your business. You claim it on the actual return when you file it. So we're in Q3. So you would request your credit when you apply. If you're eligible, you would request on the return that you file for Q3. Now, what do you do for last year? Obviously, the first quarter and second quarter of 2021 have already passed. Obviously, last year has already passed. And this is where the majority of the claims come in, is that's where we amend the payroll tax return. What I want people to know about this is when we amend a payroll tax return, we're only doing this for the benefit of the employee retention credit. It's not impacting any other numbers on that return, nor is it impacting any of your annual numbers. So us amending the 2020 payroll tax returns doesn't impact your annual filings, does not impact your W-2s, strictly for this credit. So it's very straightforward in that. Now, you can also request an advance in the current calendar quarter. They have this form, it's called an IRS Form 7200, where it allows you to say, hey, I'm going to be eligible. Say it's, we're in Q3. I'm going to be eligible for Q3. So I want to go ahead and get that money sooner rather than later. So we've helped many people request this advance, and they're able to get that money a little bit faster. When it comes back to these, the new businesses that have opened after February 15th, we can literally request an advance now for the Q3. They don't have to wait until they file it. And then the other option that you have is that you can actually reduce or eliminate current federal tax deposits. And so you just hold back that money and then you reconcile it when you file your return. Now, what's the timing on this? Certainly, if you reduce or eliminate your federal tax deposits, that has an immediate impact on your cash flow. So that's the fastest way to take advantage of this. If you request an advance, we've seen them process as fast as 4 weeks, but we've also seen them take as long as 12 weeks for you to get that money. So it's not an advance where you get it in a couple of days. It still does take some time. Now, what we've seen in terms of timeline, when you file for the credit on the original return, it can be anywhere from as early as 2 months, but it can take up to as long as 4 to 5 months to get that money. And if we're amending a return, it's taking the IRS anywhere from 6 to 9 months to issue that check out to the business. So in terms of setting expectations, please look at this in terms of what are any immediate cash flow needs that you have for your business. And then let's figure out what's the best way to claim this. So here's our process. Once you sign up with us, we go through a detailed eligibility/qualification review. And what that does is we go over how you qualify, when you qualify, and then how much you qualify for, right? And so we go through all of that. We know all of the IRS requirements, all of the backup documents that were required for this. And then what we need is you just provide payroll data to us. There's no profit and loss statements. There's no personal information that we need. We just need strictly payroll data, which is primarily your federal tax return, payroll returns, and then gross wages by employee. Then what we do is we go ahead and we draft all of the necessary IRS documents, both the supporting spreadsheets, worksheets, and the amended returns. You review and then sign them, and then we submit them to the IRS on your behalf. We send everything confirmed receipt. Believe it or not, the IRS has lost a piece of mail or two, so it's important that you stick to a confirmed process. And then also what we do is we follow up with the IRS on your behalf, and we know exactly like the workflow that happens on this. And what we also do is that if the IRS has any questions about the submission, we are acting as your advocate to answer those. So there's no concern about like having to, if they do ask a question or anything like that, we're right there with them to address those questions for you. And then really you just sit back and wait for that check to show up in the mail. And I know it kind of sounds a little hokey, but almost every day or twice a day, I get calls from people we've helped saying, I literally just got a check in the mail from the IRS for whatever amount. We had one guy who couldn't believe it. He got a check in the mail for $1.86 million, and all ranges. Okay. So one of these days you go through this, there's going to be a check from the United States Treasury, and it's going to be for the significant sum of money that you've received through this program. So just an overview. The max potential credit for this is up to $33,000 per employee. This is significant real money. Like I said, there's real cash back, literally check in the mail. It won't be direct deposited into your account. You will get a check in the mail. It'll be made out to the business, okay, not to the individual. And as I mentioned, if cash flow is a concern, there's other ways to take advantage of this credit, either through an advance or reduction of your federal tax deposits. Now, there's no income tax implications on the money you receive. So you don't pay income tax on any of this money that you get back, okay? And if you have any further questions on how to treat this from a tax standpoint, we can go over that. One of the best things about this program is there's no forgiveness requirements. Everyone who got a PPP loan or has a second PPP loan knows about all of the forgiveness requirements that you have to go through, and how you can only spend so much on non-payroll expenses. Here, once you get the money, that's it. There's no forgiveness process. And the next line here is there's no requirement on use of funds. Whatever the business can do whatever they want with that money. Some of them are choosing to reinvest it in new opportunities. Some of them are reimbursing their employees. Some of them are reimbursing themselves. So there's no requirement on how you use the funds. Now, if you did, for instance, have some difficulty paying the IRS during this tough time, you can actually also offset it against previous year's tax burdens. And, and we've helped businesses do that as well. Obviously, nobody wants to owe the IRS money. That is not a fun conversation to have. This is a great program to use to just kind of get back to to not owing the IRS anything. So, and the other thing about it is, there's so many things about it. You're dealing with the IRS. Just know that you have Emerge 180 handling the entire process from start to finish and with you the entire way. So you have that peace of mind that you're working with, tax professionals that know the ins and outs of this program. So that's it on the employee retention credit. I do want to just briefly go over the SBA disaster loan, just for those of you who may not be familiar with it or haven't taken advantage of it. Then I'm going to go just briefly touch on PPP loan forgiveness. So it's a federal loan through the SBA. This is not the IRS, this is the SBA. And it is not forgivable, okay? But they did increase the max amount now up to $500,000. I look at this as, I don't know if we'll see a loan for this amount, this cheap, with these terms in our lifetime. And even if you don't have a specific use of use for the money, think of it as maybe one of the cheapest insurance policies you can get for having cash on hand for your business. So it's 30 years, 3.75% for a business, 2.75% for nonprofits. They are even deferring your first payment up to 24 months. And you can actually request a further deferment up to 4 years. Not a lot of people know that, but you can request that. Now, the process does take a while. It started out at about 30 to 60 days. That is slowly creeping up. It's more like 120 days. There is what's called a targeted idle advance that still has money in it. That's up to $10,000. There's some pretty strict requirements on that, but if you think you might be eligible, we can discuss that. You do have to use the proceeds on working capital, payroll, business expenses. So there are some limitations on how you use the funds. The eligibility is pretty broad. You don't have to have any employees. This is one that's open to sole proprietors and independent contractors. You just have to have 1,000 or less full-time employees. You do have to be located in and primarily operate in the United States. And there's requirements of when that business was opened. There's also a list of ineligible businesses that the SBA has put out that if you have some questions on that, we can discuss. And this is what's important to know. A personal guarantee is required on anything over $200,000. So if you're concerned about personally guaranteeing something, know that that's the limitation of where they switch from just having to pledge some of the business interests to the personal interests on this. Now, if you're a nonprofit, that does not apply. So those are just some highlights. Hopefully many of you have already taken advantage of this program or have looked at it. And certainly if you do have more questions on it, we can help you with that. I will tell you that the SBA over the last year has really refined their online process. So it's gotten pretty good. There are limitations on how much money is in there. So if you haven't applied for it, and you want to do this, I would go ahead and apply for it now because I don't see them putting more money into this program going forward. They're going to use up what's remaining and then close it out, just like what they did with the Restaurant Revitalization Fund. Okay, PPP loan forgiveness. Many of you have already gone through this process with your first loan. Many of you are about to go through it with your second loan. Just some highlights on this, right? Only 60% of the PPP is required to be spent on payroll expenses. It's very important that you know that. And it's also very important that you identify your non-payroll expenses. And I'll tell you why in a second. But there's the difference. If you had under $150,000 PPP, you are eligible for this simple process or program, as opposed to above that, you have to go through a regular application. And the difference is on the amounts of information that you need to provide to your lender to get the loan forgiveness approved, and then also get it approved by the SBA. Now, the deadline, it's not one size fits all for everyone, right? The deadline is 10 months after the end of the covered period. So if you got a PPP loan in April of last year, the covered period was 24 weeks. So let's put it sometime in October. You have 10 months from that point to apply for forgiveness. So 10 months from October is now August. So if you haven't applied, I was talking to a couple of business owners recently, and I'm like, you better move on this. You're down to a few days of getting that submission in to get it forgiven. Okay, and that same deadline applies to if you got a second PPP loan. As I mentioned, payroll expenses for the PPP are excluded from the employee retention credit. You can't double dip on the same dollar of wage. But the key to all of this, and we've had many businesses say, well, it's just simpler for me. I just said I more than covered it with my wages, not an issue. But by maximizing your non-payroll expenses, okay, and minimizing your payroll expenses by still getting it at least 60% or higher, what we're seeing through we're able to capture a 10 to 20% increase on the ERC. So by how you do your forgiveness actually is the difference between putting more money in your pocket through the employee retention credit. And that's why we've helped a lot of businesses with the forgiveness process, just in order to properly identify those non-payroll expenses, free up more qualified wages for the employee retention credit, and put more money back into the business owner's pocket. Now, I'm just going to end with a true story here. I call this the tale of two brothers. Literally, we have clients. They're two brothers. They each own sports bars on opposite sides of town, and they've conducted their sports bars for many years, and they're both our clients for this program. One of them just said, hey, you know what? I'm just going to go for the loan forgiveness, and I just used all my wages. The other one said, hey, I've got rent expenses and I've got all these other non-payroll expenses, and he just identified them on there. Well, when we went to do the analysis on their employee retention credit, it literally was the difference of $10,000 more for the one brother who identified his non-payroll expenses as opposed to the other one. And $10,000 to them was a huge sum of money that was incredibly helpful in terms of keeping the operations going for this. And the other brother was just distraught that he had lost out on that money just by doing not identifying those non-payroll expenses. So if you have a second PPP loan and you haven't applied for forgiveness yet, I can just tell you it's worth the exercise of identifying those non-payroll expenses. So that's the presentation for today. Like I said, I know I've thrown a lot of information out at you. I tried to keep this so we had plenty of time for questions, and we'll go ahead and open it up for questions now.
So, Jonathan, I have a couple to start with. One is from Sharon Edwards. On the new business, the startup on the new business, would that include a nonprofit?
Yes.
501c3? Okay. All right. Then I have one from Doris Mueller for one of her clients. Does a second PPP loan have to be forgiven before applying for this credit?
That's a great question, and the answer is no. But what we want to do is go ahead and go through the process of identifying non-payroll and payroll expenses. So when we calculate the employee retention credit, we have those numbers. And so we actually go through that with every client, because the vast majority of them haven't applied for forgiveness or haven't received forgiveness yet. So, but we definitely do account for that.
Okay, so and we covered the drop dead date, which is going to be in 2026 sometime, and that this is not taxable. It's not a taxable credit, correct?
It is correct, yeah. And I'll just clarify the statute of limitations, so to speak. And this may be more IRS, than text speak than you guys want to hear, but a standard IRS regulations, you have 3 years to file an amended return. It can be on anything in order to capture money back, right? Okay. The same goes for your personal tax or business tax or whatever it may be. Well, what they did when they passed the second stimulus package is just for the employee retention credit, they extended that 3 years out to 5 years. So when we talk about that, so in order to capture the 2020 employee retention credit, it's 5 years from the date of that filing. So that would end at the beginning of end of 2025, and then each subsequent quarter goes into the 2026. So that's a little bit more detailed response in terms of the deadline on this.
Okay, so and the way we heard this here was that like the chamber, we got PPP loan. We would qualify for this credit also?
Yeah, you can have them both in conjunction, and then it goes just down to you're eligible based on your whether or not you had W-2 wages, and then we would qualify you based on whether or not you were under any government order that limited the operations. If there was a decline in gross receipts, which from a nonprofit standpoint also includes membership dues. It also includes donations, those, so on and so forth.
Okay, so the next question was kind of, if we apply today and we turn everything over to you, we give you all the information. From today, how long before we knew whether or not we qualified and we're going to get something? Not necessarily when we were going to get the money, but when we qualified and approximately how much? How long does that take?
So our standard delivery time is 2 weeks. So once we get everything, within 2 weeks, we'll come back with how you qualify, the time periods that you qualify, and the amounts that you qualify for. And then,
Okay.
on how, like we talked about, the amended returns are going to take a long time to process, but we're going to see them as fast as possible.
Yeah, once you have it, then it's on the IRS.
Right.
And we know how
The whole
quickly
team
they
actually
act unless they.
dedicated to every day following up with the IRS, reviewing transcripts, so we know exactly when it's processed. I could take you through the whole gamut of how the IRS does this too. I just, out of respect to everyone's time, I will say.
So the other question that we had is, I think you told us previously that the fee is 8%. Okay.
Yeah, great question. Let me go over our fee structure.
Okay.
Yeah, so there's a $100 admin fee to get started, and we have that. Basically, it covers our postage and delivery. We have a secure portal, so all of your information is stored securely. We don't like to do anything via email. Then you also have that secure portal, so you have access to all of your information anytime. So that's a $100 admin fee that just really covers those costs. And then it's no more. The highest, it's no more than 8% of the amount of the credit, and you do not pay that fee until after you receive the money. So really, you're only out of pocket the $100, and then you pay our fee once the money shows up in your mailbox.
Wow, you're pretty trusting.
Well, in today's climate, I think it's worthy to be that. So
yeah, I think I would have to agree with you. I think that's a good way to do business.
Yeah.
And I can open it up. That's all the questions I have written. Did anybody in the room have a question?
Yeah, I had a couple of questions. So if a company is a partnership and they don't pay wages, they pay to FICA, are they eligible for the employer credit? The employee retention credit?
So you have to have reported W-2 wages. So if you're not submitting a 941 or a 944 that's identifying gross wages in line 2 of that, then most likely you do not qualify for it.
So those owners can't just say, well, I'm an employee, but because they're not paying themselves W-2. Right.
Yeah, correct. And how you're going through this is when we're doing the amendment, and this may be too much information, but there's a qualified part of the credit and a non-qualified, which actually is a credit against some of the taxes that have been contributed by the company. It's just the way that IRS allocates that, right? But if you don't have any identified wages, there's not really anything to put the credit against.
Sure. Okay. So my next question is, it seems to me that the people reviewing the PPP loan forgiveness are an entirely different group of people than we're talking about for the IRS employee retention credit. So if they did go in and put 100% of the use of the PPP on that schedule as if it was payroll, is there a way then to say, well, whoa, in terms of the employer retention credit, we probably shouldn't have just listed that. We have all these other issues. Is that possible?
Yeah, it is possible. And just to clarify, when you're talking about, there's 2 different groups you're talking about at the kind of federal level, right? The SBA is handling the PPP through all of their lenders. national banks all down to, other private lenders. Whereas the IRS, it's internally handling the employee retention credit. Now, the key to that is the amount of the PPP loan and how you identified what some of those non-payroll expenses. And, when you apply for a PPP loan, it also depends on who your lender is. Now, early on, there were several lenders. If you were under the 150,000, you were only required to provide one document. But what several lenders started to do is they started to almost require, regardless of the amount, the equivalent of a regular application for forgiveness, which means those things have to be identified. Now, the federal government does have audit components in place where they can review the PPP loan forgiveness application versus the employee retention credit. So in other words, so we're going to be a little bit more conservative in our approach, knowing that the last thing that you want is for some type of audit to happen down the road between your PPP and the employee retention credit. That's why we're just going ahead and carving those dollars out. However, we have been able to qualify many businesses that had under 150,000 because we went back and were able to complete the necessary worksheets that only need to be maintained at the company level that identified the non-payroll expenses. So I know there's kind of a lot, there's a lot going on in that response, but hopefully it made a little bit of sense.
No, that makes more sense to me. And let me just throw out that I work for the SBDC, the Small Business Development Centers.
Oh, yeah.
And we're listed as the people that you're supposed to call if you have trouble with your PPP loan or your EIDL loan. And
right.
Very often, people are calling us because they got bad advice from a third-party organization about one of these loan applications or the process or the rules or whatever. And I just want to say, you are doing a tremendous job. Everything I've heard today is just fantastic. If I would have had clients that went to you, they wouldn't even need to call me.
Well, I appreciate that. And that's why it's such a pleasure to speak with, this organization today, because it's just amazing how much misinformation is out there, how misunderstood the program is, or just even that it's not getting the attention that it deserves. I mean, this is just such significant money that can go back into the businesses that it's just, and like I've told people, it's just like, the IRS is not known for marketing, giving money back. So you can't expect them to start putting up billboards about it or anything like that. But that's why I think, a grassroots effort and the things that we're doing like today are so important for spreading the word.
Well, good job.
Jonathan, I have a question. To follow up, this is Doug, I'm in the car. To follow up on Sam's question about the fee, is that then, like you would an accountant, is that then deductible in the subsequent year?
Yeah, it's a fee just like anything else. Yeah, it's a professional fee.
Okay, so they can.
I'm gonna. There's a little known thing here too that for those of you who apply. So the IRS by regulation, right? If you owe the IRS money, they charge interest on it, right? 4 or 5%. But if they owe you money, they pay interest on it. So when we go back and get money back, say from last year, the IRS is paying interest sometimes between 3 and 5% on the amount of the credit. So you think about it, it's kind of like you're getting more money back on top of this, and it's almost like it could be covering our fee, right? Because our fee is only based on the amount we apply for, not any of the additional interest. So that's, not a lot of people know that kind of little nuance too.
Yeah, they don't tell you. I just cashed.
Wow. Hey, this has been phenomenal. I hope everybody has put their email in the chat so we can send you a link to the replay. Are there any more questions? I don't see any more in the chat.
Make sure, Sam, make sure that they make sure they call the number on the flyer, because that's directly related to the neighborhood program and the chamber and everything like that. And Tori, I think, is that right, Jonathan, on your end, is the one kind of processing this?
Yep. Thanks, Doug. Yes, she's handling all the calls that come in on that number for you guys. And then we're also just, if, we're also just taking the member chamber list and then running it against whoever signs up too, just as a double check on that.
Oh, wow.
So I believe, yeah, there's already been several that have signed up.
Right. And we are reaching outside of just so you know, we're reaching outside of our chamber footprint to try and get people involved, either to get them money back or to, obviously bring them on as a chamber member as well.
Oh, that's perfect. Yeah. And like I talked about, I don't want to belabor the point, but any of these new businesses that have started up, they very likely that we can qualify them as a recovery startup business, which means for the last half of this year, we could get them up to $100,000. So any new business that's coming to you or your own outreach in terms of attracting businesses that are open, that's a huge advantage.
So just a point here as to how much Jonathan and his team are putting into this. We have several accountants in the chamber. We have several businesses who use accountants outside the chamber. And basically their accountants are telling them it's too much work for not enough money, and they're not doing the work. So definitely, if your accountant tells you that, reach out to Jonathan's team and let him figure it out for you. Let's face it, $100 to have him look at your paperwork and decide whether or not you qualify. Good God, you spend that on a night out. So, and that's if you go by yourself. So anyway, it's Jonathan, this is just amazing what you're doing here.
Thank you, Sam. I appreciate that. Like I said, I appreciate all the efforts you're making. This is how we make a real difference in our community. So I'm really just proud to be part of it.
Yeah. And guys, there's if you have the flyer that we sent you from the chamber, there's a number at the bottom of it that identifies, number one, that it's a chamber call, and call him, call his office. And what's her name? Tori, is that her name?
Tori.
And we've had some, like Quinn's here, she's already called in. And yeah, get the process started. If there's no more questions, I think we're done.
Well, thank you, everyone. It's been
Thanks,
a real pleasure to speak with all of you today.
Thank you.
All right. Thanks, Jonathan.
Thank you.
Y'all have a good day.